and break down everything that you need to know if you are just starting to learn about investing. What is up, everyone? Welcome back to my channel. My name is Pat Harris and I'm a full-time Amazon seller, but I also like to share videos just like this where I talk about investing, trading stocks, options, anything to do with making money. I like to share different videos, so if you like this type of content, make sure to hit that like button until it turns blue and hit the subscribe button, and just by doing that, I do a $100 giveaway at the end of every month. I pick a random winner and announce it in my videos, so stay tuned for that. But in this video, I'm going to break down everything that you need to know if you want to start investing your money, whether it's stocks, options, ETFs, long-term retirement funds. I'm going to cover everything that I know so you have a better chance at making money on your investment. Now keep in mind, I'm not a professional. I've been doing it since about 2015, but I've made a lot more than I've lost, so I guess that's a good thing. I'll put a video right here of one of my portfolios so you know that I'm not lying, but we're going to get into my computer and break down everything that you need to know if you are just starting to learn about investing so you have a better chance at making profit. Let's go. Alright guys, so here we are on my computer, but I forgot to tell you that I recently launched a Discord community where I post all of my calls, my trades, my stock holding, all of that. You could come hang out, chat, ask questions. It's a lot of helpful people in there, and you could join below for completely free. There's no charge, but that is my new Discord community, so I wanted to mention that. But let's get into the video. So we are going to go over everything that you should know if you are just starting to learn about investing, and there's a lot of different questions that people ask me, and the main one is, which platform are you using for all of your trades? And my answer is Robinhood, TD Ameritrade, and Vanguard. Robinhood I use for all my crypto, my trades like my stock trading and my option trading. It's really easy to use. Basically, a 10-year-old could use Robinhood. The interface is really simple. A lot of people say that it's not good because they have a lot of glitches recently, but they've been updating their servers and they've been expanding and getting a lot more improvements on their platform. So there's always going to be issues with different platforms, and I've never really had any with Robinhood, even though others have. So Robinhood is great if you're a beginner. It's really easy to use and it's completely free to get, and you don't have to pay any commission on any trades. So some platforms used to charge a fee whenever you would place a trade, but Robinhood doesn't have any of that. You can click the link down below in the description if you want to try out Robinhood. And then the other things I use is Vanguard, which is another broker, and I use it for my Roth IRA, which is my retirement fund. I'll get into what that is later. And then I also use TD Ameritrade, which is another platform. I use it for stocks or penny stocks that aren't on Robinhood. They're usually available on TD Ameritrade because once they go below $1, Robinhood doesn't let them stay on their platform. So TD Ameritrade has a lot of other stocks and options on their platform that Robinhood doesn't. And then I also have some long-term stock positions on TD Ameritrade, but you only need one to start out, and you could start with Robinhood. And then if you want to get into options trading and really know that whole platform, you could try TOS or Webull. Those are other popular options, but those are all the platforms that I recommend and what I use. And then it all depends on your timeline. So if you want to trade stocks, do you want to hold them for the short term, for the long term? Do you want to have them for retirement? So whether you're old or young, it all depends on that. So we're going to get into short term. So if you are looking for short term investments, I would recommend single stocks, whether buying like Disney or Apple, or you could try options, which are a little more complex. I have another video on that if you want to check it out. I'll put the link down below in the description. But options and stocks are your best bet for short term investments. You could try to make a lot of money quick if you want to just do like a week or two expiration on your options, or if you just want to hold stocks for a couple months and see if they rise, that's called swing trading, then you could do that with stocks or options. But I would recommend long-term investing because the market is always moving. Just by the history, the market has always been going up in the long term. There are drops and dips all along the way. So when I say long-term, that means you're going to hold these positions for a long period of time, more than a year, maybe 5 to 10 years, or your retirement. So the first thing you want to do is get an ETF, which is an exchange traded fund, and it's basically a mix of a whole bunch of different companies in one fund. So if one company drops, it's not going to bring your whole portfolio down. It's going to be equaled out by the other companies which are going up. Think of it like this. So if you have JP Morgan Chase Bank, you have one share and it's $100, and then all of a sudden JP Morgan goes bankrupt, that share is going to go to zero. But if you have an ETF with JP Morgan in it, then that ETF is not going to go down that much because that ETF ETF has a whole bunch of other banks like Bank of America, Wells Fargo. It's going to be more equally balanced. So if a company goes down, then it might be balanced by another company going up. I'm probably confusing you, but that's what an ETF is. You can look at all the other options out there on Google. Just type in what's an ETF. But in short, that's what an ETF is, and it limits risk because you have a whole bunch of companies in one position rather than holding one stock, which could go up and down really fast if there's any news on that company. And then the next is a Roth IRA, which is a retirement fund. That's what I use Vanguard for. A Roth IRA is great because when you take your money out when you retire, they don't tax that income, so you get the full amount. Usually when you sell stocks, there's a thing called capital gains tax where they tax your money that you make from the stock market. But if you have it in a Roth IRA and you take it out when you retire and it's been in there for the full term, then you don't have any tax to pay on that balance. So that's why it's great. So you could do $100, you could do $200, but they don't let you go over $6,000. So you could do a max of $6,000 per year in your Roth IRA, and that's for the long-term holding for your retirement fund. And then when you take it out when you're retired, you don't pay any of those taxes. So that's why it's really great. I wish I knew about this when I was younger, but there's nothing I could do. I have one now, so I'm pretty happy. And then the next thing is always invest in blue chip companies. So think about companies that are going to be around in 5 to 10 years, 20 years. What I could think of is like Apple, Disney. You know they're not going anywhere. They've been around forever. But if you invest in a new company that is a startup, the chances are it could fail eventually, or it could just do really good and rocket up. So you always have a chance of making a lot of money if you pick a good company. But I always recommend blue chip companies because they're proven, they have a ton of money, their balance sheets are really good, and you know they're not going to go bankrupt in the next year. You know they will be around for the long term. Think about companies, if you're looking around your house, which companies provide the products that you use the most, and do your investing based on that. So here are some of the mistakes that I've made along my journey. I always tried buying at the bottom, but it ended up being the top, and market would tank. Market is always moving, so you're never going to be able to time the market. You're not going to get in the right time, but you can do limited buys. So if you're going to buy 100 shares, only buy 20 shares at this time, and then if the market drops, buy another 10 shares. If the market keeps dropping, then you could buy another 10 shares. You don't want to buy all of your stocks or trades, whatever it is, in one day, because the chances are you'll have a better opportunity if the market dips, and then that's when you want to buy. You never want to buy when it's right at the top, but you can never tell when it is at the top. So there's a lot of different charts that you could read, but we're not going to get into that. Another thing is don't panic sell. If the market drops 5% and then you sell when it's down 5%, chances are the market's going to bounce back about 2 or 3%. So now you just lost money, and then if you buy back in, then it might go down. So you never want to panic sell after a big drop off. You could always sell before the drop off, but if it's already dropped off pretty big, you don't want to sell because that's lost money. You'd rather hold the stock positions until it comes back up, unless it's a bad company that's going bankrupt, then you want to get out of there. But a lot of times people will panic and lose all of their money, and then the stock market will come back and they wish they would have held their money. Another thing is don't buy penny stocks. You can get lucky, but almost every penny stock that I've bought went to zero and I lost all of my money. I bought MoviePass, I bought weed stocks, and they all were like 10 or 20 cents. So I bought like 200 of them because they're really cheap, but then they ended up all going to zero. They went bankrupt and I lost all my money. So always invest in good companies, do your research, just don't buy a random penny stock. And then right here I put, just because the stock price is cheap, it doesn't mean that it's a good one to buy. Like I just said, you don't want to just buy a stock because it's a cheap price. You want to look at their balance sheet, their P/E, which is their price to earnings ratio. And that is pretty much it. So there's a lot more to investing. I just went over the basics. It really comes down to your timeline, how old you are, how much money you have, how quick you want to make money, how risky of an investment you want to make. You have different options. Like I said, there's options, stocks, ETFs. You could do a Roth IRA. You could check my other video out if you want to get more into options. I'm going to have a ton of other videos related to investing, like covered calls, puts, spreads, all of this stuff. Oh, and don't forget that stocks always go up. Stocks don't always go up. There are times when it's going to crash. Just like it did in March, the market tanked about 15 to 20%. So there are big crashes. So don't believe that stocks only go up, because eventually they might come down, and that's the perfect time to buy. All right, so I hope you liked this video. If you haven't joined the Discord, click the link down below and you can find a lot more information and ask questions. But that is it for this video. I will see you in the next video. Good luck.